When starting your business in whatever you do, you need to make a lot of difficult choices. And one of those is whether or not you're going to operate as a sole proprietorship, which means you're doing business as a fictional business name, or an LLC or an S-Corp. These are things that, in my experience, were never taught to me throughout my 16 years of schooling. I have a 4-year degree, a bachelor's degree in communications and media production, and a minor in psychology. And with all these intellectual courses that I took, not one touched on what is a 401k, what is medical, what is dental, how does it work? What is an IRA? What's a simple IRA? What's a Roth IRA? What's a traditional IRA? What's an S-Corp? What's an LLC? What's a sole proprietorship? I was never taught that, and it should absolutely be part of a core curriculum in schooling. And maybe it is today, but it wasn't when I was growing up. So what I'd like to do is explain to you one of these big decisions, which is whether you're going to be filing as an LLC or an S-Corp. And we'll touch on what a sole proprietorship does and the advantages and disadvantages of being just that. You ready? Let's dive in. Welcome to the License Your Music podcast, where I'm here to give you all the tools you need to license your music to film, TV, ads, trailers, video games, and more, so that you can earn passive income and obtain creative freedom. I'm your host, Jody Friedman. Today, we're going to talk about one of the big choices you have to make when you start a business. But before we go into that, I want to tell you about a free guide on our website called How to Get Your Music Heard by Music Supervisors. Come by the site, download that free guide, and depending on when you're listening to this, our music licensing masterclass is currently open for signups. So come on by, check it out. We're taking new students, so get on the wait list. If it's not available, get on the wait list, and we'll make sure to let you know next time it is open for enrollment. LLCs, S-Corps, sole proprietorships, one of the hardest things you're going to be faced with, if you're not already, is starting to conduct your own business. So if you start getting into music licensing, or I should say when, because if you're listening to this, you want to be licensing your music. So when you get into licensing your music, you're going to have to decide, do I start an S-Corp? Do I start an LLC? Am I a sole proprietor? And what does that all mean? So today, we're going to focus on which one is better, an LLC or an S-Corp, and we're going to talk about the differences between the two. But I'd like to start by just talking about when it started for me, and we'll segue into what an LLC and S-Corp is. For me, when I started my publishing company, I was living in New York, and I remember going down to I don't remember what it was called, but the financial district, and this massive building with these big columns. I was so proud to walk in that building and be able to file for my publishing company, my first publishing company, which was called Harmony Distribution Music, and it was my ASCAP company name. So because of, at that time, I was a DBA. I still worked for CNN at the time. So I was a DBA, and that means doing business as. And it basically is Jody Friedman, the individual with a social security number tied to his identity, doing business as Harmony Distribution Music. The tax connotations, it's the same as if you're just doing business as yourself and you don't file for that. But by having that name, Harmony Distribution Music, I was able to cash checks made out to Harmony Distribution Music, which was my ASCAP company name, my ASCAP publishing company name. So the sole proprietorship is really the first steps you take when you start doing business, is going down or looking up on your local county's website and looking, how do I establish myself as a sole proprietor, as doing business as. There are certain requirements depending on where you live. In New York, it was different than it was in California. So I'm not going to advise you on what that is, but you need to look that up if you want to do that. And I definitely would recommend doing that, because then you're conducting business under a business name. And it can be any business name you want. When you're a sole proprietor, you can choose any name you really want that's available, I should say. But you can't copyright a title. So as far as I know, I could be Jody Friedman doing business as Amazon, because Amazon is not a copyrighted title. However, Amazon, whatever their corporation name is probably copyrighted, and their whole thing is trademarked. So if I was doing something and operating like an Amazon website, doing what Amazon does and selling products like they do, then that's an issue. But if I was like Jody Friedman doing business as Amazon Music ASCAP, I think that would be fine. Don't quote me on that. I'm not so sure. And I should also preface this by saying, and I'm getting on a tangent, but I'm not an accountant. So any of these decisions you have to make, please check with your accountant. I'm just going to share with you my own personal experience and what I've done and what I've learned over the years to try and help you on your journey. So that being said, let's talk about which is better, an LLC or an S-Corp. The main reason to do an LLC or an S-Corp versus a sole proprietor. So like I said, you start as a sole proprietor, and then if you start doing business under this company name, John Doe as XYZ Music, and you start getting placements under XYZ Music, eventually you're going to want to incorporate. And by incorporating, that means becoming an LLC or an S-Corp. The number one reason is if the business was ever sued, the creditors, the IRS, they cannot seize your personal assets. And that's a big deal. That means if something happens, they can't come after your car, your house, your personal investments, any personal investments you have into stock or 401ks or IRAs. They can't come after that. If you're an S-Corp, a sole proprietor or an S-Corp, and you get sued, they can come after that. So, and I want you to think about this. Not most people watching are thinking, well, I'm never going to get sued. It's not always just about copyright infringement. You got to think of anything that could happen to you. You could accidentally get in a car accident and, kill somebody, right? It's a terrible thing to say, but it does happen to people, and it doesn't mean you did it on purpose, but you could get sued. Not even death. It could be injuring somebody. Somebody could sue you for something like that. So you have to be prepared. I know that's a morbid topic, but you have to be prepared should these things ever happen. You need to protect yourself and your personal assets should these accidents ever happen that could lead to you getting sued. So that is the number one reason to incorporate. So it's something to keep in mind. Other things to keep in mind. You'll need to keep good records of your accounting because you'll be taking expenses from the business when you incorporate. And I'm going to start by saying there are certain things that come with that, at least in California, when you form an LLC or an S-Corp, that first year, those taxes, the California taxes, there's an $800 yearly fee due to the Franchise Tax Board every year for being incorporated. So you're paying for that protection, kind of like insurance, but a lot cheaper than insurance, $800 a year. And that first year, it's actually waived, the first year you're in business, as of the year 2021, which is when I'm creating this podcast. So that's something to be aware of. So there is an expense that comes with that. But again, you are protected should anything happen. So it's very important. I highly recommend doing it. So you'll need to keep good records of your accounting because you'll be taking expenses from the business. What does that mean? Let's use a real life example. Let's say that I work from home, which a lot of us in this music licensing space do. We have a home office and a home studio. Let's say that my office is 20% the size of my home. So it's 1/5 the size of my home. What I can do then is allocate my expenses at that rate. So my house cleaning bills, my power bill, my water bill, anything related that's in use by the business, the heat, the gas, the electricity, those are all things that the business uses because the business is based in my home. So the business, I use the restroom every so often, right? So I have utility bills that pile up from my day to day. So 20% of those bills, if it's a $100 bill, $20 of that bill is an expense. And what I can do with that expense is I can lower my tax bracket. I can lower my taxable income because it's not my gross earnings, it's my net earnings. But you have to keep good records. So if you start doing this, you do need to start some form of accounting system. People usually start with Excel, but QuickBooks is what I use, and it's a great accounting software. Once you learn to use it, you get over a little bit of a learning curve, and I'm sure there are online courses in QuickBooks. I have to imagine there are for pretty cheap. So you just need to know the basics of using it, and I definitely would recommend getting QuickBooks and incorporating. Okay, let's go back to the taxation. When talking about these two options, it is important to understand the IRS collects on two types of taxes primarily. Employment tax. These taxes include Social Security, Medicare, and unemployment tax. If you've ever been paid by a corporation, somebody you've worked for that's a corporation, you'll see this in your paycheck. You'll see Social Security, FUTA, which is federal unemployment tax, and Medicare taken out, and it's going towards your Medicare and Social Security and unemployment, should you ever have to file for unemployment. Income tax is also taken out. That's the other type of tax, the state, local, and federal income tax. Depending on where you live, those taxes may vary. So two types of taxes primarily taxed on by the IRS: employment tax, also sometimes called self-employment tax, and income tax. It's also vital to understand that an S-Corp really is a tax classification. So an LLC, which is a partnership, can be taxed as either an LLC or an S-Corp, and we're going to talk about that here in a minute. Let's talk about an LLC. What is an LLC partnership? An LLC can be a single member LLC. That's where you are the sole member, and the word member just means owner, okay? The IRS likes to use fancy words sometimes, and one of those words is member. And an LLC single member or single class LLC is where you are the only member, so you have the protection of the LLC, but that money that the LLC makes passes through to you as an individual, just like a sole proprietorship. It can also be multi-membered, where there are multiple partners involved in an LLC, in which case that money still passes through as a distribution to each partner, but each partner is responsible for paying their employment taxes. So that's something to keep in mind, because we're going to talk about that here in a minute. Members are not employees with an LLC. There's no employees, and they're not paid a salary. They're paid distributions, like I just explained. A distribution is where that money is distributed to the members and it passes through, and then the member pays the employment tax on that distribution. So what happens if an LLC chooses to be taxed as an S-Corp? Well, now the members can be paid both a salary and a distribution. And this is so important. It's such an important distinction to make between the LLC and an S-Corp. And I'm going to repeat it here. The LLC members, owners, are not paid salaries. They're paid distributions. They're not employees. They are owners, partners, and they're paid distributions. With an S-Corp, the members can also be employees. Okay, so you can have a salary, which means you get a W-2 from your S-Corp at the end of the year. You issue yourself a W-2, and you get a distribution, which they use a form called a K-1 to distribute those funds and file during tax season. LLCs and S-Corps are taxed differently. That's the key thing to remember here. How are they taxed differently? With an LLC, I'm gonna reiterate what I just said. The money passes through the LLC as a distribution, and it's subject to both of the taxes we talked about: employment tax, Social Security, Medicare, and unemployment, and income tax. That's state, local, and federal income tax. So an LLC, you're paying both employment tax and income tax on your distribution. There's a single class LLC, which is when there's one member, like we spoke about. And then there's a multi-member LLC, which is taxed as a partnership. The income is a distribution amongst the partners, and each partner pays employment tax and income tax. If an LLC is taxed as an S-Corp, if you file for an LLC, which means you get the protection of being incorporated, where if you're sued, they can't come after your personal assets. They can come after the business and the business assets, but they cannot come after your personal assets. If an LLC is taxed as an S-Corp, members are able to be employees, like we spoke about. And why is this important? Remember, employees receive both the salary and the distribution, and the salary has to pay employment tax and income tax. Just like when you get a paycheck from a company that you worked for, you have that employment tax and the income tax on there that you have to pay. But the distribution in this case, you only have to pay on the income tax. So for the distribution, the portion that you take as a distribution as an owner, you can have a distribution in addition to your salary. You can take a distribution if you want, and you're only subject to income tax, that state, local, and federal income tax on that distribution. There's no employment tax on that distribution. And that's about 15%. That employment tax usually is about 15% of what you make. So there's a significant savings in being an S-Corp. There's a significant, I should say, it's a savings, but it's an amount that you get paid up front, because there's some cons that come with that. We're going to go over this. But that's something that's a key distinguishable factor between an S-Corp and an LLC is the fact that there's no employment tax on that distribution when you're an S-Corp, because you have the salary as well, which you're paying employment tax on when you get that salary. So you must take a reasonable salary. That's what the IRS defines as something that's relative and reasonable to what your business earns. And you have to decide that based on the market and your earnings, and then you take the rest as a distribution. So you can't say your business makes $500,000 in a year. You can't take a $20,000 salary. The IRS is not going to be happy about that. So you have to choose what's reasonable and relative to what your business is making for the IRS to say, okay, we accept that. So that's a decision for you to make with your accountant. The rest of it you take as a distribution. The biggest con, it requires a bit more work from you, because you're going to have to be doing a lot more accounting and keeping track of your expenses really closely when you're doing it this way, because of this separation between the distribution and the salary and the way they're both taxed. So there's a bit more work involved when you're an S-Corp. Running payroll, tracking expenses, paying for an accountant. With an LLC, you may not need an accountant, especially if it's just you. I definitely would recommend one, but you could probably get away with TurboTax or doing that as an LLC. By not paying into your employment tax, this is a key thing to understand. When you're not paying that Social Security and that Medicare tax payment, you're not paying towards your own Social Security and your Medicare. So when you retire 20, 30, 40 years from now, if you're just starting out, when you retire, those funds aren't going to be as built up as someone who's regularly contributing from every paycheck. You're not going to get as big of a Social Security check or Medicare coverage as you would if you contribute towards that. So it's definitely something to consider, depending on how important that is to you. My personal opinion, this is just my opinion, I don't think Social Security is necessarily going to be around when I retire. So I'm kind of banking on that. So I still put in towards my Social Security when I take a salary, but that's why I do the salary and the distribution. How do you make the decision? It's a tough decision to make. So how can you make that decision? A big part of it is how much profit the company's making. A general rule of thumb is if a distribution is higher than $10,000, if you're taking a distribution of more than $10,000, you probably should do an S-Corp. If you plan to take a distribution and not reinvest into the company, you probably should do an S-Corp. So when there's an LLC and there's multiple partners involved, a lot of times you're just growing that company as a startup together, or even if it's just you're just investing that money back into the company. So if that's the case, then you're not really needing to take that salary. You don't need that salary. You don't want that salary because you're putting it back into the company. So in that case, it might be smarter to just do an LLC. But another factor that should weigh into your decision is if you want to contribute more towards your Social Security and Medicare, then you may want to stick to an LLC. That's really it, guys. If these are hard decisions to make. I chose to do an S-Corp because it was just me with my company. And when the company grew and started to make more money, I decided to start an S-Corp because I wanted the protection of being incorporated. So I filed, we elected to be file as an S-Corp. I had an accountant already because my accounting was getting more complex, because the more licenses I got, the more accounting that there was involved in that. And I ultimately decided to incorporate to have that protection, and also to take advantage of those tax benefits that come with being an S-Corp. So I'm able to take both a salary that's relative to what the company makes and a distribution. I still contribute towards my Social Security, my Medicare, but I also get a distribution every year, and I can determine what that distribution is based on how much I'm investing back into the company and how much I'm not investing into the company and I need to take to pay the bills. So that's really it, guys. Thanks so much for tuning in and listening. This was probably not the most exciting episode, and if you hung in there with me, I really do appreciate it. Please leave us a review here on Apple or Spotify or wherever you're listening. If you're watching on YouTube, please comment below and let me know any questions you have about this. Again, I'm not an accountant. This is just my experience, my opinion on it, and what's worked for me. Hopefully it is helpful for you. Please come by our website, download our free guide on the website to learn about how to license your music for film, TV, ads, trailers, and more. Tune in. Our podcast release every Tuesday at midnight, so please subscribe. Subscribe to us on YouTube as well at License Your Music. We're on Facebook, Instagram. Thanks so much for tuning in. I will see you next time. Stay cool. Peace.